The rise of decentralized finance, DeFi, opportunities, challenges, and future trends. Welcome to our channel, where we delve into the dynamic world of decentralized finance, DeFi, uncovering the latest trends and insights in the ever-evolving landscape of financial innovation and opportunity. Decentralized finance, DeFi, has emerged as a transformative force within the financial landscape, leveraging blockchain technology to provide innovative solutions to traditional financial services. Unlike centralized financial systems, DeFi operates on a decentralized infrastructure, offering greater accessibility, transparency, and autonomy to users worldwide. This paradigm shift has unlocked a myriad of opportunities, while also presenting several challenges and paving the way for future trends in the industry. Before we begin, make sure to smash that like button and hit the subscribe for more exciting content. 1. Democratization of finance. Decentralized finance, DeFi platforms, revolutionize access to financial services by circumventing intermediaries and granting unrestricted entry to anyone with internet connectivity. This inclusivity is transformative, empowering individuals from historically underserved regions to engage in global financial markets. By eradicating barriers to entry, DeFi fosters unprecedented financial inclusion, transcending geographical limitations and socioeconomic disparities. Through decentralized networks, individuals gain autonomy over their financial assets, enabling participation in diverse investment opportunities and wealth-building strategies. Ultimately, DeFi's democratization of finance represents a pivotal step towards creating a more equitable and accessible financial ecosystem, unleashing the potential for economic empowerment on a global scale. 2. Elimination of middlemen. At the core of DeFi lies the principle of eliminating intermediaries, such as banks and financial institutions, which have long dictated traditional financial transactions. This paradigm shift is made possible through the utilization of smart contracts, enabled by blockchain technology. Smart contracts automate processes that were traditionally mediated by middlemen, streamlining and expediting financial transactions while concurrently reducing associated costs. By bypassing the need for intermediaries, DeFi platforms empower users with greater control over their financial activities, enhancing transparency and efficiency throughout the entire process. Consequently, this removal of intermediaries not only promotes cost-effectiveness, but also fosters a more equitable and accessible financial landscape, marking a significant departure from the centralized models of the past. 3. Borderless transactions. DeFi's borderless nature revolutionizes transactions by enabling users to seamlessly transfer value across geographical boundaries without reliance on traditional banking infrastructure. This capability unlocks a myriad of opportunities for international trade, remittances, and investments, fostering greater global economic integration. Unlike conventional systems, which may impose barriers such as currency conversion fees or lengthy processing times, DeFi facilitates frictionless cross-border transactions. This enhanced accessibility empowers individuals and businesses to engage in cross-border commerce with unprecedented ease and efficiency. Moreover, DeFi's borderless functionality holds the potential to drive financial inclusion by providing underserved populations with access to international markets and opportunities previously beyond their reach. As a result, DeFi not only transforms the way value is exchanged, but also democratizes access to global financial resources, driving innovation and economic growth on a global scale. 4. Enhanced transparency. Blockchain technology offers immutable, transparent transaction records accessible to all participants, fostering trust and accountability within the financial ecosystem. This transparency mitigates the risk of fraud, as every transaction is permanently recorded and verifiable by all stakeholders. By providing a tamper-resistant ledger, blockchain instills confidence among users, ensuring the integrity of financial transactions. Consequently, this heightened transparency not only enhances trust, but also promotes a more accountable financial environment, where fraudulent activities are significantly mitigated, and stakeholders can confidently engage in transactions with assurance in the integrity of the system. 5. Financial sovereignty. DeFi empowers individuals with complete control over their financial assets, eliminating reliance on third-party custodians. With self-custody wallets and decentralized exchanges, users maintain sovereignty over their funds, reducing the risk of asset seizure or censorship. By bypassing traditional custodial services, individuals retain ownership and control, safeguarding their assets against external interference. This decentralized approach not only enhances financial autonomy, but also mitigates the risk of censorship or confiscation, ensuring that users have unfettered access to their funds at all times. As a result, DeFi offers a paradigm shift towards greater individual empowerment and financial sovereignty in the digital age. 6. Yield farming and liquidity mining. Yield farming and liquidity mining have emerged as prominent strategies in the DeFi ecosystem, enabling users to generate passive income by supplying liquidity to decentralized exchanges or lending platforms. These innovative incentive mechanisms reward participants for contributing their assets to DeFi protocols, thus incentivizing liquidity provision and driving the growth of decentralized finance. By offering attractive rewards in the form of tokens or interest, yield farming and liquidity mining attract capital to DeFi platforms, enhancing liquidity and fostering vibrant ecosystems. This dynamic interplay of incentives and participation fuels innovation and expansion within the DeFi space, facilitating the evolution of novel financial products and services for users worldwide. 7. Interoperability. Interoperability stands as a pivotal requirement for the seamless movement of assets and liquidity across various DeFi protocols and blockchain networks. Projects focusing on cross-chain bridges and interoperable protocols are paramount in breaking down the barriers that create siloed ecosystems. By enabling interoperability, these initiatives facilitate greater composability and scalability within the DeFi landscape. Users can access a wider range of financial products and services, while developers can build on existing protocols, fostering innovation and efficiency. As interoperability continues to evolve, it not only enhances the usability of DeFi applications, but also lays the groundwork for a more interconnected and resilient decentralized financial infrastructure. 8. Regulatory challenges. The decentralized nature of DeFi presents significant regulatory challenges globally. Unlike traditional finance, DeFi lacks centralized entities and clear jurisdictional boundaries, complicating oversight. This decentralization raises concerns for investor protection, AML, and KYC compliance. Without central intermediaries, enforcing regulations becomes more complex. Policymakers must navigate this decentralized landscape to establish frameworks balancing innovation with consumer protection. Collaboration among regulators, industry stakeholders, and tech experts is vital for developing effective regulatory solutions. These efforts aim to foster responsible innovation while mitigating risks within the DeFi ecosystem, ensuring its long-term sustainability and integrity. 9. Smart contract risks. In DeFi, smart contracts streamline agreements but are prone to coding flaws. Platforms mitigate risks through security audits, formal verification, and standardized templates. Audits entail code reviews to identify vulnerabilities, while formal verification ensures contracts function as intended. Standardized templates minimize coding errors. These measures enhance the integrity of DeFi platforms, fortifying them against potential exploits and fostering user trust. By prioritizing security, DeFi platforms instill confidence and drive continued growth in decentralized finance. 10. Scalability constraints. Scalability presents a significant challenge for DeFi as transaction demand strains blockchain networks. Layer 2 scaling solutions, such as sidechains and rollups, aim to alleviate congestion and increase throughput without compromising security or decentralization. These solutions enable off-chain processing, consolidating transactions before settling them on the main blockchain. By distributing the network load across multiple layers, scalability challenges are mitigated, allowing DeFi platforms to accommodate growing user activity while preserving network integrity. Ongoing advancements in Layer 2 scaling technology position the DeFi ecosystem to achieve greater scalability, facilitating broader adoption and fostering innovation within decentralized finance. 11. Cross-chain interoperability. Achieving seamless interoperability between different blockchain networks is critical for the expansion of decentralized finance (DeFi) ecosystems. Cross-chain protocols and interoperability standards facilitate the transfer of assets and data across disparate blockchains, unlocking new opportunities for innovation and collaboration. These protocols allow users to access a broader range of financial services and assets, including tokens, loans, and decentralized exchanges, regardless of the underlying blockchain. Interoperability also enhances liquidity by enabling assets to move more freely between different platforms and ecosystems. As DeFi continues to grow, interoperability will play a crucial role in driving further innovation and expanding the reach of decentralized finance to a wider audience. 12. Evolution of decentralized exchanges (DEX). Decentralized exchanges (DEX) have undergone a remarkable evolution, transforming from rudimentary platforms to sophisticated ecosystems at the forefront of decentralized finance (DeFi). Initially, DEX offered basic token swaps without order books or advanced trading features. However, as the demand for decentralized trading grew, so did the complexity and capabilities of DEX. One significant evolution is the introduction of liquidity pools, which allow users to provide liquidity and earn fees, creating a more efficient market. Automated market makers (AMMs), such as Uniswap, revolutionized DEX by replacing order books with algorithms that dynamically adjust token prices based on supply and demand. 13. Regulatory compliance solutions. As regulators seek to address concerns surrounding decentralized finance (DeFi), compliance solutions tailored to decentralized environments are emerging. Projects focusing on decentralized identity, on-chain compliance protocols, and privacy-enhancing technologies aim to strike a balance between regulatory requirements and user privacy. Decentralized identity solutions allow users to verify their identity without relying on centralized authorities, ensuring compliance with Know Your Customer (KYC) and anti-money laundering (AML) regulations. On-chain compliance protocols enable the creation and enforcement of rules within smart contracts, ensuring that transactions comply with regulatory requirements. Privacy-enhancing technologies such as zero-knowledge proofs and secure multi-party computation protect user data while still allowing for regulatory compliance. These solutions are crucial for the continued growth of DeFi, as they enable innovation while addressing regulatory concerns. 14. Decentralized insurance and risk management. The DeFi ecosystem is witnessing the emergence of decentralized insurance protocols that provide coverage against smart contract failures, hacks, and other risks. These insurance platforms utilize blockchain technology to automate claims processing and ensure transparency in risk assessment and payout mechanisms. By leveraging smart contracts, decentralized insurance protocols can execute claims automatically when predefined conditions are met, eliminating the need for manual intervention and reducing the potential for fraud. Moreover, these platforms allow users to participate in the insurance pool as providers of liquidity, earning rewards in the form of premiums. Decentralized insurance protocols are a crucial component of the DeFi ecosystem, providing users with protection against unforeseen events while also enhancing the overall security and resilience of decentralized finance applications. 15. Growth of decentralized lending and borrowing. Decentralized lending and borrowing platforms facilitate peer-to-peer lending and borrowing of digital assets without intermediaries. These platforms offer competitive interest rates, collateralization options, and instant loan approvals, empowering individuals to access liquidity and earn passive income. Users can borrow assets by locking up collateral, which is held in smart contracts until the loan is repaid. This collateralization reduces the risk of default and enables borrowers to access funds quickly and easily. On the other hand, lenders can earn interest on their assets by providing liquidity to the platform. Decentralized lending and borrowing platforms have become popular in the DeFi ecosystem due to their transparency, efficiency, and accessibility. They enable users to borrow and lend assets in a trustless manner, without relying on traditional financial institutions. 16. Governance and Decentralized Autonomous Organizations, DAOs. Decentralized governance mechanisms and decentralized autonomous organizations, DAOs, are integral to the decision-making processes within DeFi protocols. Token holders participate in governance proposals, vote on protocol upgrades, and shape the direction of decentralized platforms, fostering community-driven development and innovation. 17. Sustainable finance and ESG initiatives. The integration of environmental, social, and governance (ESG) principles within DeFi protocols is gaining traction, with projects focusing on sustainability, carbon offsetting, and impact investing. By aligning with ESG standards, DeFi platforms aim to attract socially responsible investors and promote sustainable financial practices. These initiatives include supporting projects that contribute to environmental sustainability, such as renewable energy or conservation efforts, and incorporating social impact metrics into investment decisions. Governance structures within DeFi platforms are also evolving to include ESG considerations, with token holders voting on proposals that align with these principles. 18. Decentralized identity and reputation systems. Decentralized identity solutions leverage blockchain technology to provide users with self-sovereign identity management, enabling secure and privacy-preserving authentication across various DeFi applications. These solutions allow users to control their identity information, reducing reliance on centralized authorities and enhancing security. Reputation systems built on decentralized networks enhance trust and mitigate fraud by evaluating users' transaction history and interactions. These systems can help DeFi platforms assess the risk associated with each user and make more informed decisions regarding lending, borrowing, and other financial activities. 19. Integration of oracles and external data feeds. Oracles serve as bridges between off-chain data sources and on-chain smart contracts, enabling DeFi applications to access real-world information such as asset prices, weather data, and event outcomes. Secure and decentralized oracle networks enhance the reliability and accuracy of data feeds, minimizing the risk of manipulation or tampering. These oracle networks rely on a decentralized network of nodes to fetch, verify, and deliver external data to smart contracts. By decentralizing this process, oracle networks reduce the risk of a single point of failure and increase the security of data feeds. 20. Evolution of regulatory frameworks. As DeFi continues to evolve, regulatory frameworks governing decentralized finance are expected to adapt to the unique characteristics of blockchain-based financial systems. Collaborative efforts between regulators, industry stakeholders, and academia are essential to develop clear guidelines that foster innovation while addressing systemic risks and ensuring consumer protection. Regulators are increasingly recognizing the potential of DeFi to democratize finance, improve financial inclusion, and enhance efficiency in traditional financial systems. Decentralization is at the core of DeFi, enabling peer-to-peer transactions without the need for intermediaries. The rise of DeFi represents a paradigm shift in the financial industry, offering unprecedented opportunities for innovation, inclusion, and autonomy. However, navigating the challenges of regulatory compliance, security risks, and scalability constraints requires collaborative efforts from stakeholders across the ecosystem. By embracing decentralization, interoperability, and sustainable practices, the future of DeFi holds immense potential to reshape global finance and empower individuals worldwide. Interoperability, on the other hand, allows different DeFi platforms to communicate and interact seamlessly, creating a more interconnected and efficient financial ecosystem. This enables users to access a wider range of services and assets, further driving innovation and growth in the DeFi space. If you find our videos helpful, don't forget to share, subscribe, and hit the like button to support our channel.